Well, it's time to check in on the grain markets here in this particular segment. I'm Marlon Bowling with you, along with Brian Splitt of Allendale Incorporated in McHenry, Illinois. We're going to take a look at what's driving the grain trade today. And Brian, thanks for joining us here today. Some new information from USDA. Wanted to pass this along just hot off the wire here. It's our new weekly export inspections numbers. Let's share them with our viewers and listeners here. We have the corn coming in this week with a total of 738,779. That compares to last week's 687,996 tons. And if you look back a year ago, I see where the total was 1.36 million, so well off the pace that we had a year ago. Sorghum, 130,018 tons this time around, compares to last week's 67,400. About a year ago, though, it was 123,000, so just about on par with that pace. Soybeans came in at 1.03 million tons, not too unexpected there. Last week was 931,000, and a year ago that number was 386,000. Meanwhile, wheat, 499,995. Let's just call it 500,000 tons, and last week was 468,700. A year ago that was just short of 900,000, so well off of last year's pace there, although the current marketing year-to-date numbers are just about identical. So Brian, your thoughts here on these export inspections numbers. Is the trade even going to pay attention to this with everything else going on?
I don't know that the trade really trades the inspection numbers very heavily either way, week to week. But it is important to note that soybean inspections were very strong, definitely above the year-ago levels for this week. And really now looking at the current marketing year to date, we're running about 700,000 tons above the previous marketing year to date. So the interest right now is for importers want their soybeans, and I think that has a lot to do with some very early concerns about the Brazilian planting. It's dry there, and generally the producers down there will not plant until they get a nice little rain. And so the longer it takes to get the crop in the ground, that's just going to push back their harvest, and that'll keep export interest to the U.S. in the meantime.
Let's look at our futures then and see what is going on in the grain trade. We had a lower open in the corn, but it turned around and went a little bit higher. We have December corn up 1/2 cent at $3.54 per bushel. In March, up 3/4 at $3.66 3/4. If you look at the soybean trade right now, soybeans really did not have a good open. They had November soybeans with a high overnight of 9.85 3/4. Now we're at 9.74 3/4, 11 cents off of that, and now we're within a penny of our low of the day, down 9.5 cents right now. January down 9 1/4. Now on the wheat market, let's look at Chicago first. On December, we're 4 1/4 higher at 4.53 3/4. That was a significant about face after the open. We're about a dime off our earlier low today. On the Kansas City wheat market, kind of the same thing took place. December now 4 1/4 higher at 4.54 1/2 per bushel. That's 11 cents off its earlier low. And then if you look at Minneapolis spring wheat traded, had been up about 15 cents higher at one point. Now we're at 6.47 1/2 per bushel on that December contract. We're now up 12 3/4 cents on the day. What happened to the wheat market to boost it up so fast?
I'm not sure what the interest is coming from, but I can tell you that the technicals look very solid. We've got right now an outside day higher on the Kansas City contract, meaning that last night we were trading below Friday's lows, the daily lows, and now we're trading above Friday's highs, and that's generally a sign of some pretty good strength when you see a reversal like that. I think it is worthy to note that wheat in general, the Chicago and KC, last week we're making new highs for the move. So wheat put in some bottoming prices back in August on the 29th, about 2 days before corn put in its lows. And since then, wheat's been able to continue to make new highs for the move. Similar to soybeans, soybeans were making new highs for the move last week as well. So the straggler right now is corn, and corn needs to get above 362 in order to accomplish the same thing. And I think if wheat can continue to press higher here, maybe we can see corn follow along. But 362 is going to be a pretty tough number. If we can get through that, it does look like the charts could project up to the 375 to 380 area.
All right, Brian, we'll come back and talk about this livestock market when we come back right after these messages. Don't go anywhere. Want to take a peek at the cotton market here, get you updated there on what the new crop December contract is doing. So let's go ahead and pull that up for everybody. If we look at the big board here with our live quotes, right now that December contract is trading at 68.64 per pound. That would be up 18 points on the day. We're talking with Brian Splitt of Allendale Incorporated right now. And Brian, you were mentioning right before we came back on the air, coming out of a break here, that you said that was quite an impressive move in the crude oil market. What is propping that up today?
You know, this crude oil market has been under $50 a barrel for quite some time, and just today we've been able to break through the 200-day moving average. And this particular crude oil contract, the front month is now November, has not traded above the 200-day moving average since April 19th. And we made a test of the 200-day back in late May and failed miserably from that level. So crude oil finding some strength, as well as a turnaround in gold and silver. So some early strength in the dollar has backed off a little bit, and we're seeing some buying interest coming into the energies. Hopefully, we've seen some pretty strong correlations between crude oil and bean oil. And, crude oil being an energy product, if we can see some strength, that may help out the ethanol margins as well. So, we're looking at that, hopefully being able to continue to see these gains and maintain some strength. I think recent forecasts have now been laid out that crude oil may trade between $50 and $60 a barrel through the rest of the year, which, if we can test $60 a barrel, that's, another $8 of additional upside yet.
Okay, on the open this morning, we did trade the cattle market for a little bit, but then they went limit down on the live cattle and feeder cattle market, other than the nearby contracts. For the most part, we still are December through April live cattle limit down $3 lower on the on the feeder cattle side. Here you have the October through March all limit down $4.50 lower. This appears to be in response, Brian, to the very bearish cattle on feed numbers and the higher than expected beef inventory in the nation's freezers that came out Friday afternoon. Do you think this market will bounce before the close today?
There's an awful lot of time for this market to come off limit, but there was a lot of buying prior to the cattle on feed numbers, and we had the on feed, the placements, and the marketing numbers all came out bearish. Like you had mentioned, the cold storage numbers came out bearish. And this market had a significant rally coming into this late last week. So there's a lot of traders that are caught on the wrong side of the market. It's interesting to me that the February contract had gapped lower from about the same price that we had gapped lower from back in July. And the eventual outcome of that gap was a move down to about the 110 level basis the February contract in mid-August. So it took about a month to get there. That may suggest that by mid to late October, we could be seeing February futures retesting 110.
All right. Well, Brian, we'll have to leave it there. I appreciate that very much. And just a quick look at our lean hog trade. It has been fairly flat here today on the, let's go ahead and show the October contract there on lean hogs, up 25. The rest are a little bit lower. Brian Splitt is with Allendale Incorporated in McHenry, Illinois. So thanks for the analysis. Appreciate that.
Yeah, absolutely. Okay, we'll keep watching the markets. Markets editor Marlon Bowling.